Hey, welcome. I want to talk about Tesla. But just to get started, a couple things we'll chat about is one, we're going to dig into the financials. Then we're going to look at the industry that Tesla is in, just see how that is going. Then we will look at the technicals in terms of the charts. We'll also look at some of the fundamentals of what's going on in the media. And to round it out, what is going on in China and Tesla and what's driving the demand for EVs, let alone Tesla. So at a very high level, that's what I want to chat about. So let's jump in and get started. I want to share with you a cool website. The website is called Coifin. Tesla right here. And then this is the financials right here. So a couple things we can dig into is the key financials, the capital structure, and then the cash flow analysis. And the tab I want to look at, we're just looking at the highlights. But if somebody wanted to drill down, you can see the income statement, the balance sheet, the cash flow, the multiples, the enterprise value, profitability, and solvency. But this is what I really enjoy about this particular site because it's easy on the eyes. Say, for example, on the gross profit, they've got these bar charts. And so this, for me, is just a quick hack. I can take a peek and visually size up the health of the, or if that's what you want to call it, the health of the business. So gross profit, this goes back to, looks like mid 2013, gross profit up and to the right. Then gross profit margin, net income trending up and to the right. The year-over-year growth percentage. It doesn't look great on paper right here, but it does make sense, especially for the last few years in terms of what this world has been going through. Now down to the capital structure in terms of the market capitalization. And again, classic chart up and to the right. Then we've got right here the cash and equivalents up and to the right. So at a very high level, and I won't go through all of these, but this is really cool. So if you want to take the pulse of the business, what a quick and easy way to do that. This is the Analyst. In terms of what they are thinking. I'm going to focus right down here in the lower left. So there are 38 total analysts covering Tesla. There are 5 right here that are saying sell or strong sell, but then the rest right here, there's 15 that are saying hold, 12 are saying buy, and then 6 are saying strong buy. So that's interesting. So in terms of fundamentals for Tesla, what you're looking at here, this is all of the news on Tesla. Not all, but this is a great chunk of it. And you can see over here, this is June 20th. And all of this takes us, this only goes down to June 19th. But we could scroll down the page of news on Tesla. This is a quick way to get a scan, get a feel for what is going on. One thing I wanted to call out, it's right here. The Tesla Model Y emerges as a strong contender to dethrone the Ford F-150 as America's best loved vehicle. And if you just click on that, you can actually see a Twitter version of this story that came out on June 20th. You can actually click on this to see the actual article. A quick way to size up the fundamentals on Tesla. And as we get near the end of the video, I've got additional fundamentals I want to share in terms of what's going on specifically with Tesla and China. One thing I forgot to mention is when we're looking at Tesla, I'm not going to go into the storage, the batteries per se, because I'm going to share with you in a few minutes, you're going to clearly see that the car sales, that is the bulk of the revenue for Tesla. So I'm going to bypass some of the other business units, but I thought I would talk real quickly on solar because for some of you that may be aware, Tesla is definitely in the solar market for both residential and commercial. I saw this solar ETF and I had to share this with you. It's called TAN, T-A-N. This is going to be a good indication of what is coming Tesla's way to help them accelerate their solar sales. This dates back right here, looks like back to 2013. But the thing I want to call out for any of you that are aware of patterns in trading, I'm going to really oversimplify this bull pennant in terms of probabilities, in terms of bullishness. It's pretty high. It's not the most bullish pattern out there, which I'm going to share with you as we progress through the video on some really good patterns that say Tesla is in. This is a pennant or a bull pennant formation. This is in the 70 percentile in terms of a breakout, and this is typically a continuation pattern to the upside. And the thing I want to call out is, and to really oversimplify it, if you see this right here, this is the flag pull. From a measured move perspective, once this thing does break, it's typically the distance of this flag pull. The other thing I want to share with you, I know it's somewhat off topic, but it's still on topic, and that is if we look at the home builders here in the US, and this ticker is ITB. And what I wanted you to call out, I noticed this, that if solar is literally like moving in tandem with the home builders. You can just clearly see this. So when we've got the uptrends, now we've got some downtrends, right? We've got some uptrends, we've got some uptrends, and then we had this crash. Looks like we took the elevator down, and then we had this jump up. It looks like from a solar perspective, it's in that bull pennant. But then the home builders right here, if you can see, this is an extremely bullish pattern. This is the same pattern that NVIDIA was in, if you're familiar with NVIDIA over the last few weeks. This rounded bottom from a measured move perspective, once the home builders break out, this thing is going to be a nice jump to the upside. It's typically, once it breaks out of this neckline right here, it is typically a measured move from the neckline down here. So that puts home builders somewhere up here. And this is going to take some time, maybe over the next 12 months or so. But boy, solar looks really nice, and it looks like it's piggybacking off of the home builders, which only makes sense. And then in terms of solar itself, we're a little early, but we are looking like we are months away. And I'm going to share another chart on this as well here in a few minutes, but extremely bullish setup in the making in the auto manufacturing industry. So there's 38 total companies. You can see them right here. Here's 20 of the 38. But right here, we've got Tesla in the pole position at number 1. The reason why that is I stacked ranked these companies by market cap. You can see right here, Tesla has an $811 billion market cap at time of recording. And then in the second spot is Toyota, third is Honda, fourth is Ford. And this was interesting. Ferrari, it's in 5th place. I just talked about this in a few other videos. Ferrari, as a complete side note, it's at all-time highs. This thing is on a massive breakout. I don't see that trend slowing down anytime soon. But what I thought was interesting is if you were to add up Toyota, Honda, Ford, even Ferrari, and I'm just doing some rough math, but gosh, if you add all of these up, literally, they don't even come close as an aggregate to the total market cap of Tesla. The industry that the auto manufacturers fall under is the consumer cyclical. Let's take a peek at how the consumer cyclical is performing against the other industries within it. Let me just find auto manufacturers. It's right here. It's in the 3rd spot for today at time of recording. And if we scroll down and take a peek at the week, so for the last 7 days, auto manufacturers is number 1 at plus a little over 7%. For 1 month relative performance, auto manufacturers are plus 31%. Once we look at the Tesla chart itself, it makes sense because Tesla is in a huge breakout. If we added up all of the competitors in that auto manufacturing industry, they don't even really come close in terms of market share. So I think Tesla is the one that's moving this market. If we go down to the 90-day, the 3-month relative performance, shocker. Auto manufacturers is number 1 as well, plus 32%. The half yearly auto manufacturers is in the 2nd at plus 36%. Tesla year to date is one of the best performing assets globally. So this only makes sense. we're looking at here are some charts. And this is why I love FinViz if we just want to do a quick scan. So first of all, there's 3 moving averages, and that's the SMA 20, 50, and 200. And you can see them right here, right? They're all squeezing, but also we can see that price action is above all 3 of the moving averages. So that's bullish. And this is what's really cool about FinViz. If you see this purple line, it automatically draws in these trend lines. So we've got this ascending wedge formation right in here, and this is compression that creates all of this energy. We clearly had a breakout to the upside. Remember, this is the daily. Now let's go into the weekly time frame to really zoom out. So if I scan this, we've got the moving averages right here. They're all bunched up, which is great. Price action is above all 3 of the moving averages. Nice. We've got some nice volume here and here, which is positive. So if we were to draw a trend line right here and just go all the way over to the left. Yeah, so this makes sense. It ran into some resistance right here with this little chunk right there. Again, remember, these are weekly. These candles all represent 7 days. So this is where it's coming into a little bit of resistance. But it doesn't worry me. I'm still, based off what I'm seeing now from the technicals, I love it. And then just for kicks, let's just draw in. This is where we had the breakout right there. So this makes sense. Bullish pattern setup in the making. Now, I'm pivoting away and out of FinViz. We are in TradingView. They've got these live line charts. Here's the 1 month performance. Love the trend. Here's 6 months. It's up 105%. This is what I was alluding to earlier. Year to date in 2023, it's up 119%. From a performance standpoint, up 119%. Last year, not so great, but I like this pattern that we are in. And then for the last 5 years, you can see the trend in all time. There's a saying that you may have heard, but you can see I'm going all the way back to 2011. But if we were just to draw this, and the saying is the bigger the base, and this is right here, the base. So the bigger the base, once we get a breakout, and we had one right here, but the bigger the base, the higher in space. TradingView also has a news section. It's always cool to take a peek at the news from both sites. But as I scan this, a couple things. This just came out 11 hours ago, but Tesla chief Musk sees significant investments in India. India just surpassed China in terms of population. And India is doing really well in comparison to historically, but that country is doing extremely well, and the economy is up and coming. Tesla sweeps top spots in Cars.com American-Made Index over 4 GM, as an example. Tesla takes top 4 spots on Cars.com American-Made Index for 2023. Electric vehicles in China gets 72 billion in extended tax. So we'll round out TradingView in terms of the fundamentals with the revenue. This is what I want to call out. If you can see this, the blue is the automotive, and then this little kind of turquoise or green section, this is the energy generation and storage coming in at almost 4 billion. I alluded to this at the top of the video. This is why I wanted to shy away from the energy generation and storage, because it's a smaller portion of the business, but this energy generation and storage is one of the fastest growing segments of Tesla. If we look all the way to the right, it's just nicely stair-stepping its way up and to the right. And then down here, this is a breakdown by geos in terms of market penetration for the vehicles. So blue is US and China is this kind of greenish. China's right here, and the orange is other. So US is 40 billion, China is 18 billion, and other is almost 23 billion. If you look from 2016, beautiful trend. This is not how I determine my entries or exits, but I use this as a guidepost. So let me walk you through this real quick. Oscillators. Think of the RSI, the stochastic, the commodity channel index, the MACD is a good one. Then over here are the moving averages. And just think of EMAs. There's all kinds of moving averages. Gosh, I think there's like almost 20 or so. But just think of the exponential moving averages or the simple moving averages, EMA, SMA ribbons, et cetera, et cetera. We're on the 1 day. So if we look at the summary is an aggregate of the oscillator and the moving averages. But on the daily, we've got a sell for the oscillators. And on the moving averages is a strong buy. The summary is a buy. Now, if we look at the weekly, the gauges don't move. But if you notice, focus down here on the sell and the neutral. So we go from 1 day to weekly. So on the daily, there was 5 that said sell, and now we went down to 4 as an example. So the gauges didn't move, but watch this. On the monthly, that means you are early as an example. So just real quick on this. So the oscillators is a buy, and then on the moving averages, it is a strong buy, and then the aggregate is a strong buy on the summary. So again, just to summarize, that tells me that from a setup standpoint, that this is going to be a nice move for what appears to be, again, potentially quite a while. So we're early in this move, which is really exciting. So here is Tesla. Let's take a quick peek at the technicals. So these are weekly bars, weekly timeframes. We're still on Tesla. We're going all the way back to looks like 2011, but here's the base. So remember the saying, the bigger the base. So here's the base. And once it breaks out, so we had a breakout, a classic BRB is what I call it. So this is a breakout, a retest, and then a bounce. But again, the bigger the base, the higher in space. And we are clearly seeing this. So this thing based for what? Looks like 2013 to almost 7 years. So that's a fantastic looking base. Now let's zero in. I want to share with you a couple quick thoughts. I put the trend line right here, and this looks to be about a year ago. So about April of 2022. So we've been in this downtrend for quite some time. I went wick to wick instead of body to body. So we've got a nice little breakout. But what I want to call out is this. We've got a inverse head and shoulders pattern, which is literally the #1 most bullish pattern in all of trading. So this is the left shoulder, this is the head, and this looks to be the completion, almost the completion of the right shoulder. And again, this is one of the most bullish patterns in all of trading. So this pattern validates this breakout that's in the making. Now, remember the speedometer? The moving averages. So here's one of my favorite indicators in TradingView, and this thing is free. So this is what I love. This is called the EMA SMA ribbon. I'm going to zoom way out. Yeah, so you can see all this. So here's why I like it. Green represents strength. Like with this indicator, you don't even need to overthink it. And then red is obviously weakness. Right here, we've got some red. But what you can see is we've got this new green section. And again, we're on the weekly. Remember the speedometers, it's bullish for the daily, weekly, and monthly time frame. But on the weekly, the strength, it's just getting started right here. If you look at where we're at right here, this green section, what this reminds me of is potentially we're like right here. So we could potentially have this nice move in the future to the upside. So this, from a validation standpoint, we've got some nice moving averages, which represents strength and a nice setup in the making. Taking a little pivot away from Tesla, I just wanted to wrap up this solar idea to share with you. So still in TradingView, and this is that solar ETF, TAN, if you remember we were chatting about that. Here are the speedometers. Remember how I was saying that solar's still a little early? The setup's not quite there yet. The speedometers actually validate this. So solar is a laggard in comparison to Tesla. But just real quick. So we're on the daily, and you can see that the oscillators is neutral, and the moving average is a strong sell, summary, strong sell. But if we go to the weekly, Nothing really moved except for the oscillators went more bearish. They went to a sell. And then if we go to the monthly, it's a little better. So oscillators went to a neutral, and then the moving averages went to a sell, and the summary went from strong sell up to a sell. So I'm going to go into the charts right now. But what that tells me is that we're still a little early. But when I share this chart with you, it's a beautiful looking setup. So these candles are 2 weeks. This right here takes us back to '08. Price action came down here, got rejected. So this is acting as support. So we stayed up in this level for what looks to be about almost three years per se, but then we crashed. We took the elevator down, and then right here we came up to this level. Remember, this used to be support. Now it's acting as overhead resistance. So classic SR flip, support resistance flip. And this looks to be early 2015. We came back up again sometime in 2015, got rejected. We had this rounded bottom, and now we had a breakout, right? Now we're doing a retest. And then also, if you remember that solar pattern, that was a pennant. Check this out. This is now called a bull flag. And to oversimplify this, you can see this. Here is the flag right there. And this is the flagpole. Okay. So now this is what's cool. From a measured move perspective, once solar breaks out of this flag or this channel, you can see this right there. But anyways, once this breaks out to the upside from a measured move perspective, it's typically the distance of this flagpole. And I'm really oversimplifying. And that's why I've got this green box up there. Because again, once this eventually breaks out, we see this box up here coming into play potentially, which is the all-time high, which is the neckline for this particular chart. So solar looks amazing. And then last thing is, if we were to overlay it with the moving averages, this is that EMA SMA ribbon. Again, on the 2-week time frame. I'm going to take this down to a week just to really, you can see the difference. Yeah, there we go. So you can see for the most part, since solar's been in existence, it's just been bearish. However, we've got some nice strength building. I'll tell you, I love this setup. So we've got some strength, but then we've got price action right here. It is basing and resting nicely on these moving averages. So again, this setup is a matter of time. And if I had to scope it, I didn't do a time or price-based analysis on this, but we're looking probably a few more months out before we break out to the upside. So solar looks great, which validates that the Tesla solar should also do well as one of their business units. So here we are, more tailwinds for Tesla. So Yahoo News, and this came out June 7th of 2023. So the headline reads, solar power in the U.S. to more than double by 2028 from the IRA, which is the Inflation Reduction Act that the Biden administration passed. I think it was in 2021 or 2022. That, by the way, I did a video on that too. But the Biden administration, I think around $1 trillion or so, but just gobs of money. So more tailwinds for solar. And then I promise, last on the solar, but I made a pit stop in Google Bard. And here's the prompt, if you can see this. But I asked, what is the TAM, the total addressable market in the US until the end of the decade? What's driving solar? Then I wanted to break down the cost for residential and commercial, as well as mention the CAGR, the cumulative average growth rate. So right here, the TAM, it's expected to reach $300 billion by 2030. Some of the factors are the rising environmental concerns, which I'm going to talk about here in a few minutes, aka ESG, environmental social governance, and then government incentives. So several incentives in place for both residential and commercial to buy solar. And by the way, I did another video on oil, gas, and the utilities. sector as an example, but that too is going to break out to the upside. So we're going to see those rising costs, which we're going to feel in the pocketbook, which I also talk about here in a few minutes. Last thing, number of jobs. It's expected to create about 1.5 million jobs by the year 2030. So that's really exciting for the US. Okay, so we're back to Tesla. However, I wanted to talk about oil because I think the price of oil is also going to be a tailwind for Tesla. So this is US oil and this is WTI crude. And each one of these bars represent 1 month. We're going back to the late 70s here. I've been working on this chart now. I've had this chart for a couple years, actually. Remember the patterns that we've been talking about? So I've shared a bull pennant and a bull flag. Guess what? We've got another bull flag. Here's the flagpole. Here's the flag. Really oversimplifying, but do you see that? And remember, once this breaks out, and it already has, which I'm going to talk about in a second, then the measured move is typically the distance of the pole. So we've been in this massive flag dating back to 04. So almost when we had the breakout back in 2021. So what, 17, 18 years? But here's what I want to call out. This goes to my point. We had a breakout for oil. Now we're coming back down to do a retest, okay? So at time of recording, oil is about $72 per barrel. Yeah, it could go lower, say in the 60s or the $50 per barrel, but here's what I'm seeing, especially from an Elliott wave perspective and that measured move. But I see oil over the next, it's hard to say because I didn't do a time or price-based analysis on this, but in the next few years, I see the price of oil going up about 265%, up to about $260 a barrel. Remember, at time of recording, it's only $72. So the question is, what is this going to do for the price of gasoline at the pump? So I think that the price of gas is going to drive people to EVs, which is bullish for Tesla. Now, let's talk about the fundamentals real quick. For any of you that are familiar with Ark-Invest, I love these guys. By the way, here is their website if you're not familiar with them. But Kathy Woods, she is a legend in the making, in my opinion. Kathy Woods is the founder. Her company, Ark-Invest, they put out this research paper called Big Ideas. They do it every year. It comes out typically in January. And here's all the hot topics that they are doubling down on in terms of tech. And within this doc right here, they've got a section on electric vehicles. Now, they don't specifically mention Tesla, but let me just jump right into that. So based on Wright's law, Ark-Invest forecast EV prices will decline and sales will more than sevenfold, or 50% at an annual rate, roughly 7.8 million vehicles in 2022 to 60 million in 2027. And for those of you that are interested, they go into full detail to validate their position in terms of the data that they're using. Okay, let's talk a little bit about risk. And this is really one of the very few things that I found for risk. So this website is called Seasonality. There are several companies out there now that do ESG scoring. I won't go into detail on what ESG is or the rankings or the scoring, but I just want to call this out. So this is Tesla, and according to Seasonality, Tesla has a score of 27.2. It's not that great. So for automobiles, Tesla ranks 59th out of 91. And then the global universe of companies, I'm not too sure what that means because there's almost, 15,500 companies that they're scoring. But out of those 15,000, Tesla is coming in at around 8,894. Now, if we were to compare Tesla, what I did is I just randomly picked 3 other companies. So here's Tesla right here, and their score is at 27. So to put this in perspective, Microsoft Their score is 15. This is one of the better companies in terms of scoring. And then Toyota, if you remember, they're in second place in terms of market cap. Now, their score is actually a little worse than Tesla. And I thought, what the heck? I'll mention Amazon. So Amazon's not even that great. And by the way, if you were to look at like oil and gas companies, their scores are like in the 40s. So this is not that great, but I don't think, because ESG is somewhat new, the scoring's somewhat new. I don't know what this means for Tesla. This may mean potentially if they want to get bank loans, because if you're familiar with ESG, all the banks now, when they give out loans, the higher the ESG score that you have, the better the terms companies get. So this will be interesting moving forward. Again, the scores aren't great, but I don't think it's going to be too much risk, but something to be aware of. Now, I just want to drive this point home on the ESG because it's a thing and it's going to remain a thing. And this is the primary driver. There's several drivers. We're looking at Human Resources Director, so hcmag.com. And this is, I don't mean to go down a rabbit hole, but this is worth mentioning. The reason why ESG scoring and ESG is going to be around a while is because these large companies, say like the S&P 500 or the FTSE as an example, all of these companies have scores. This is interesting. For example, Salesforce, their executive compensation is tied to their ESG goals. So what does that mean? The higher their ESG score, the more money the executive team gets at the end of the year, okay? So you're going to hear more and more now, there's this term called neuro mining. For any of you that work at these companies in the Fortune 500s, pay attention to your all hands call as an example, or your company intranet. You're going to see all of these ESG initiatives. They're everywhere within these large companies. So again, companies like Salesforce are doing a massive push to drive up their ESG scores. Here is one from the Harvard Law School Forum or the Harvard Business Review. This came out in March of 2022. There's not a lot of new stuff on this ESG and enterprise and how it's impacting their bonuses in terms of what's out for 2023. Most of the good position papers came out from 2019 through 2022, but I like the Harvard Business Review. But the headline is Evolving Role in ESG Metrics in Executive Compensation Plans. The point I'm trying to drive home is ESG and these S&P 500s as an example, they're just getting started. So ESG score, it does matter. Okay, now we're back to Tesla and we're almost done. So I wanted to just share with you some findings that when I made another pit stop in Google Bard, and we're talking about Tesla and China. This is fascinating of what's going on in China. Real quick, according to the China Association of Automobile Manufacturers, EV sales in China are expected to reach 15 million units by 2030. This is accounting for 40% of the total passenger vehicle market. So tailwinds, government incentives, just like here in the US, ready? Environmental concerns. If anybody drank the Kool-Aid and is wearing the ESG tattoo, it is China, because it's one of the most polluted countries in the globe. The total addressable market in China is expected to be about $1 trillion by the end of the decade. And then the CAGR, the compound annual growth rate, just think of a batting average, the higher the better, it's 25%. Typically, if you see something around 10%, 11%, 15%, that's ideal, but 25. Okay, just real quick on some fundamentals. So this website is called technowise.com, and this came out June 13th of 2023. Tesla Model Y, the unstoppable rise of the top-selling SUV in China. There's another one, carnewschina.com. This came out April 10th of 2023. Tesla China sold 137,000 EVs in Q1 of this year. That's up 13% from the previous quarter. So I found this on Court.com, And this came out May 31st of 2023. Check this headline out. Tesla's $37,000 Model Y is outselling EVs that are 7 times cheaper in China. Let me repeat, 7 times cheaper. All right, this is the second to last. Stockcharts.com. And I was thinking from a seasonality standpoint, how does Tesla perform? I went back 6 years, but you can see right now at time of recording, we are in June, which is one of the strongest months for Tesla. But you can also see that July is strong. Then we've got some sales that dip in August and September. However, once we get into the fall, October, we're climbing. And then November, we're climbing. Take a dip in December. But when we start the year out, it goes up. It's a nice spike to the upside from how December looks. So from a calendar perspective and a seasonality perspective, boy, we are coming in to a nice next few months on average for Tesla. Okay, last slide. I wanted to just share with you technicals, but more importantly, Elliott wave counts for any of you Elliott wave fans out there. So the time frame is, these are 3-day time frames. And if you remember this head and shoulders patterns, there is the left shoulder, here is the head, and here is the right shoulder. And one thing I want to call out is right here. So we had this ABC correction. Here's the A, the B, and this looks to be the bottom. From an Elliott wave perspective, what I am seeing here is that we are now in the mid phase of this kind of mini third wave. So once we get this breakout, we got the 1.618 extension at $348. So I see price like taking a respite here because this third wave, it's explosive. We're going to see a little respite on the fourth wave, which is always corrective. That fourth and second wave are always corrective. From a validation standpoint, this is what I will leave you with, is this. On a long-term perspective, Tesla is literally starting its third wave. The third wave is typically twice as long as the first wave. And that third wave is where the smart money comes in, the hedge funds, the big money, the Wall Streets. But this is where they start to pour in. And these next few years, if these technicals hold up, and we don't have any black swan events, but the technicals, this chart looks amazing. I hope that was helpful. Thank you for sticking around. And if you have any questions, please just message me in the comment section, and I'd be happy to help or answer any questions. And again, thank you so much. All right, that's a wrap. Thanks.